Take a look at the chart here. You can see the ES losing some of its momentum to the upside. Now, some of this started out with rates on the rise and the unease that created in terms of investors as we pulled away from some of those growth names. The NASDAQ really took a hit. We talked about the declines we've seen off the all-time highs to begin the year and some of the selling. But here you can see crudes remain very well bid, which sort of speaks to the geopolitical tensions and how that keeps a premium in some of the crude products. And you speak to us to some of the levels you have your eye on as the Brent and the WTI will approach that $100 level.
Yeah, absolutely, Ben. You know, for quite some time, we have been of the belief that crude, once it got above $80, would move up to 86 and then to 92. And our longer term forecast on your program has been that crude will trade at $103 to $105 by pretty much at the latest the third quarter of this year. So everything that we've talked about in the past is still in play. I think short term daily closes above $92.10 in the April crude contract will be a shorter term stronger position, and closing daily below $92.10 is temporarily the weaker position for crude. But we have stopped forecasting even any declines or trying to trade any declines in crude because we believe the market is so strong. So we're simply looking for places to be buyers in crude for continued advance. One final thought. Much of what we have seen has already been priced into crude. We recognize that, and I know you do as well, but there still is a great deal of uncertainty to how the Ukraine invasion is going to play out.
A couple charts here to support that narrative. Again, the rally we've seen off the November lows, beating a December lows, 62 all the way up to 95.48. Taking a quick look here at the daily time frame, you can see the move off the pandemic lows where in some instances we saw some contracts go negative up to 95.82 again. You can see the trend environment to the upside. The weekly shows last week snapped, I think it was a 9-week decline, something, or rise, something like that. And we've recently traded back into 7-8-year highs. Let's talk a little bit about, I keep reminding everybody that this geopolitical tension that we've seen bring about a bit of a premium into the futures contracts, prices at the pump ultimately we've seen on the rise and getting us closer to some of the goals, the levels that you've been telling us to keep an eye out for, David, and you've been spot on with those levels. Credit to you. I think it's important to remind everybody that we could have some other disruption here right now. The unforeseen ultimately with these commodities is sort of what we wake up one morning and all of a sudden a ship is wedged in the Suez Canal or some sort of a disruption along those lines aside from what we already are dealing with in terms of the geopolitics. So I remind everybody that a situation that's bad can get worse.
No doubt. And I'll tell you, Russia is one of the world's largest producers of oil and natural gas.
And they haven't pulled back any yet, which they could.
17%. Yes, 17% of the world's natural gas, something like 12% of the world's oil. And a good portion of Russia's natural gas exports are carried to Europe through pipelines that pass right through Ukraine.
Yeah.
So there's quite a bit of uncertainty with how this invasion is going to take, either does it take out those pipelines, does it damage it? He's going to have cards to play to deal with the government, our government, and what they're trying to do. This is a really bold move. We haven't seen something like this in a long time. There's a great deal of uncertainty left. And the charts themselves, putting fundamentals aside, the charts on crude oil really do speak to still higher prices coming, and that means higher prices at the pump.